Welcome to the Expansive CEO podcast. I'm your host, Hannah Chapman, founder of Expansive CEO and X Squared Wealth Planning. Buckle in as we explore how to create true prosperity and build a business and a life that expands beyond yourself and makes a dent in the universe. Welcome, everyone, to this episode of the Expansive CEO podcast and Investment Friday, which we are actually recording on Friday, April 5th today, which is not typical. Typically, we record on Thursdays to post on Friday, but you're getting a full week in review this time. So I am here with the Chief Investment Officer of Juncture Wealth Strategies, Brad Haines. How are you doing, Brad?
I'm doing well. How are you, Hannah?
I am good. I'm good. I recorded another podcast earlier today. I had a great meeting with someone. I had coffee in person with someone. So it's been a good Friday, busy. But
That's awesome.
yeah, you are in a different location than
I
usual.
am in Scottsdale, Arizona, which is
Wearing a
where
monkey suit.
yes, wearing a wearing a suit. Um, excuse me. This is where our headquarters for Juncture Wealth Strategies is located, is in Scottsdale, Arizona, and we have a number of offices in Ohio and here and in Illinois. Um, but I'm here because periodically I need to come visit some clients. So that's what we're here for today.
And then you got to wear the suit. So,
Gotta
dress it
make
up,
it, gotta
snazz
make
it
it,
up.
gotta look good. Gotta look good. I can't, you know, I can only do so much to look good nowadays. So I figure I'll have to let my clothes do the talking. So
Fair enough. Well, we have had a really just a crazy week this week, really. It's been like up and then way down. And then today was up, right? So it's just been all over the place this week. And we want to talk a little bit about that. And then a little later in the podcast, we have a really fantastic question from a listener about, how do we actually pick investments that are have longevity and based on more than just purely the financials of something. So we've got a good question to stick around for later. But first, what was freaking going on this week, Brad? It was weird.
well, if you want to look at it in one aspect, this we are doing great. The US economy is doing very well, far better than most people have expected over the last 12 months. It has continued to grow, and we had some really good data come out this week. Good if you're a consumer and a worker, maybe not so good if you're the Federal Reserve, who is trying to tame inflation. So essentially, what happens is we came out with a strong labor market, a strong employment number. It came out far better than expected, 303,000 jobs relative to the expectation of 214 to 215,000 new jobs. And so all of a sudden, everybody starts to panic about the impact on inflation. Because again, inflation's around 3% right now, and the Federal Reserve would like it to be 2%. And that last 1% is becoming a little stubborn. And that is causing a little angst among the investor community. And so you have a number of speakers from the Federal Open Market Committee, which are now proffering their opinions as to future interest rate policy. And you had Neil Kashkari, president of the Minneapolis Fed, came out and said, well, we may not even do any interest rate decreases this year.
Wow.
So we going from January 1, where the expectation was 6, to Neil Kashkari now saying, we might not need to between now and the end of the year, which is again a very different scenario than people were anticipating going into 2024. And so a lot of investors are having to reassess their assumptions about what's going to happen to inflation, what's going to happen to interest rates, and what's that impact on corporate earnings. And so all of that is contributing to this wide swings. Yesterday we were up, I think 0.7% on most of the indices. And all of a sudden, Neil Kashkari made that comment, and we ended down roughly 1.25%. So that's a pretty big swing within a couple of hours just because of a comment. Um, Again, other speakers have said somewhere between 1 and 3 interest rate cuts. Some have said 3 is a good number recently, but we may start later in the year, midsummer to late summer. So it really depends on what the data comes out between now and July, June or July, to determine whether they begin to cut interest rates or not. Um, the labor market has been very, very strong, and so that is one of the fears is that if they cut interest rates, the labor market continues to be strong, even begins to accelerate, and that could put upward pressure on inflation.
Okay, so we will continue to have that inflation discussion because that like really does affect, what the market is expecting, the market swings that we see. I want to focus in a little bit though on the jobs number because it's so interesting to see this juxtaposition between the jobs numbers that we're getting and then also hear people's on the ground experience of it being very difficult to actually find and be hired for a job. Right. There's like these two narratives that are being put out side by side. Right. Here's our economic indicators, our economic data of how many jobs are available, like what's happening. And then, people saying, I have put in thousands of resumes. I have had 15 to 20 to 30 interviews and nobody's actually hiring. Right. And not so what like where's the disconnect between this two? So like in my brain, I like to find connections. So it's like where's the connection? Where's the bridge um between, here's what we say is happening and here's what people are experiencing. Can you speak to any of that?
Yeah, a little bit. So one of the reasons we had a strong labor market, strong jobs report this time was because a lot of those jobs went to teenagers, so younger people. So one of the things about the labor market statistics is the overall headline number aggregates everybody,
Mm,
right? And so it's irrespective of your age, it's irrespective of your industry, your job function, all of that. It's just an aggregate number. So if you start to break that down, for example, this number was really strong on younger people getting into the workforce and getting a job. Well, that's very different if you are a computer programmer who got laid off 3 months ago and is looking for a specific job doing a specific function. And so the technology world right now is in a bit of a setback with hiring because what's happened is since 2020, technology companies and finance companies really beefed up their payrolls. They hired a lot of people. In fact, people that they didn't even know they needed, they hired on. And now what they're doing over the past really 12 months, but really even probably into 16 months now, they've been starting to shed those jobs that are duplicative, that they realize they don't need, they can become more efficient. And that's happening. So people, for example, that aren't necessarily AI related jobs and technology, they can have a more difficult time trying to find a job as Google starts to do layoffs, as not starts, continues layoffs, Meta lays off some people. So there's a lot of people in specific industries that may not have a great tight job market.
okay, so that kind of we've talked about this before too, right? Where it's like we haven't actually experienced a recession in the overall economy, right? That's what the numbers keep showing us. We're not in recession, we're not experiencing a recession, but instead, if we kind of look at more localized industry, we actually see areas where industries in particular have been struggling. And so if those are high, well, and tech in particular is a really good example, right? Because those tend to be high paying jobs. And so,
Very high paying jobs.
right. So we've got, yeah, like tons of job growth, but in maybe the minimum wage sector versus, those multi six figure tech jobs. Um,
Exactly.
that are harder to come by. If you're not, if you can't work in that industry, if you're not finding work there, you're going to have a hard time matching that by moving over to manufacturing or, something else.
Yeah, I mean, I live in an area called Silicon Slopes. Okay. So Silicon Slopes is basically an area that is growing with a huge amount of entrepreneurial activity in technology. So, and we're seeing a lot with, marketing folks, sales folks, people that have worked in technology for 20, 30 years, have great track records, are being laid off, and they're unable to find jobs very quickly in that type of environment. So it's an interesting thing because it really depends. I've got, anecdotally, my son is a recruiter for a technology company, and he's focused on finding technologists who are focused in artificial intelligence, machine learning. So a very specific area. Um, general coders, he's not really looking for right now. And so if you're a generalized coder, it could be difficult to find a little bit of job availability out there right now. Now, that's not to say everybody, because a lot of construction workers, they need them. We need a lot of construction workers. One of the things that is growing immensely is industrial construction.
Mm,
You've heard a lot of plants about um, these new chip facilities being built. Those are very, very large projects. And so if you're a construction worker, you definitely have a lot of possibilities for work. Almost on any street corner you want to go work, you can find a job if you're a skilled construction person. So it's very industry specific because each industry has a unique economic flow right now.
okay. I think that really helps and it illuminates some of that issue that we're seeing, even with, new grads in different areas looking for, uh, looking at the demographics of what people are graduating with degrees in, right? A lot of times that does tend to be more general knowledge or engineering of some sort or business just a business degree that's pretty broad, right? That can be depending on what industry you're going into specifically, that industry might be experiencing a harder time than the overall economy as a whole. And so that's why we might not be feeling it if we're saying the economy is doing great and you're saying my economy isn't doing great. Okay, you know, there can
Yeah,
be a disconnect there.
there's wide variations. I mean, if you talk to any nurse in the United States, pretty much anywhere, we have a massive nursing shortage. And so nurses can get high paying jobs anywhere. And oftentimes they can get flexible hours to help fit their lives. Because of that shortage, employers just have to be more flexible and they have to pay them really well. So it's something that it just depends on who you are, and what kind of training you have. I mean, I think going forward, I think retraining is going to be a big deal in the
Mm.
United States going forward, and not just the United States, but really globally, where you may have coming out of school, you may have one skill set, and within 10 years, you may need to get retrained in another skill set for another career. Um, the onus will be on employers to give you that training, but still, don't get set if you're an English major about doing something quote unquote writing or teaching, because that may not be the case. However, applying that creativity to a certain space using technology is a great place to be. I just read a report where um, this gentleman is a futurist, okay, which is a person that I guess sits around and imagines the future
Mm-hmm.
and kind of plays out a particular scenario. And one of the things his comments were is AI going to help um, generate a lot of jobs? And he said, absolutely not. In fact, AI is going to be used to get rid of the routine jobs that we currently do. He said, so anything routine, anything AI can take care of that. That will take that off the plate. What it will do, it will require people to have more creativity and then use AI to implement that creativity in some service and in some product that will then help generate revenue for your company or for yourself. So it's an interesting idea that he had where AI is going to help accelerate or grow the economy because of new opportunities which currently don't exist. So this is when AI gets more and more advanced. Um, there was a comment he said where you could have an engineer design a product, use AI to help finish the design of the product. You could engage an outside manufacturer to make the product. You could then sell that product online via your store, collect the cash, pay the product, or pay the manufacturer and drop ship it to your client directly. And he's like, that is a one person cottage industry out of their home.
Mm-hmm.
And that because of AI, because of computer aided design, computer aided manufacturing, all of that is going to be available, particularly with the cloud. You can do all of that from the comfort of your home as a one employee company if you desire, but that requires creativity, requires taking a little risk. So those two things have to come together.
Yeah, I have been hearing and reading about the same thing. It was being kind of touted as potentially the rise of the generalist versus the rise of the specialist. That we've been in a very a specialist focused economy for a long time, and the way that AI is predicted to shift that is exactly like you said, getting rid of those more routine tasks where, a specialist doing a specific thing would have been needed. And instead the generalist or the like the liberal arts major, right? Finally getting to shine as the one who is, more right brained or more used to using, left and right brain together, the creativity plus the logic, so that more generalized approach to thinking and creativity, really being the next stage. So I'm super interested to see where that goes. I kind
I
of
agree.
I
He
consider myself in that category, right? Being a musician and then being in finance. People hear that and they're like, "Wait, what?" Like, no,
yeah,
these things like totally go together in my brain. I totally get the connection here.
you're a crossover. I'm not
Hmm.
as I'm not as creative as other people are, but it's interesting because what he said, because one of the things that when during his comments was he says I think AI is going to have to always be human supervised because the problem with it is right now is it's a black hole. Generative AI can give you something, but if you don't check it, it could be wrong. It could be making up its own facts or conclusions. So you
Hmm.
have to check it, right? So he said there's always going to be a human element supervising the product. So it he said I think it will redefine certain job functions to be used as a tool, much like Excel redefined how we ran finance for a very, very long time. It's going to redefine almost all job functions from marketing to finance to accounting to fulfillment. I mean, all of those types of things. It's going to help facilitate um, those job functions.
Mm, interesting. Okay, so it's not an exact dovetail, but it's pretty close. Close enough. So I'm going to use it to go into this question that we had from one of our favorite listeners, Bob from Huntsville. So he asked, let me pull up this question here. Uh, should we be looking at more data than just the financials of a company when evaluating like what stocks to purchase, especially looking at like the customer experience and customer service data, the ability of leadership to shift with the changing business landscape, all of these other factors, these more qualitative qualitative factors versus purely the quantitative data or purely the the price momentum data, right? Like how much of our analysis when we're looking at our portfolio should be focused on that qualitative data?
A lot. So for a very, very short answer, a lot of our analytics has to consider that. Because what Bob's really asking is how can we go upstream to the client to determine whether that company's product and service is being valued by that client and whether that client is going to continue to pay for that or a new client is going to start paying for that service or product, right? He's going upstream and he's saying, well, if your current clients aren't very happy with how you're doing, are you going to get new ones? Well, maybe. And I mean, absolutely, I would. I, those are some things that we look at. But incidentally, this has been around for a very, very long time. In fact, um, uh, um, a number of highly regarded investment experts back in the 80s and 90s used to um, used to hold on just a sec. They used to track the printers. So IBM, their printers, okay, they stock analysts would actually track how many orders the printers are getting for their marketing material. Because if they were getting a lot of print orders from IBM, you knew IBM was growing because they needed collateral material, marketing material, as their salesmen were going out and trying to sell their computers or software systems. And so that would be a good indicator of their revenues are going to probably continue to grow. So that would be a good indicator. Similarly, is what Bob's saying is, consumer or customer satisfaction surveys, really important, really, really important. The only problem with those, and you have to discern them a little bit, is if you do get the aggregate data, you can get a bifurcated problem, a problem of bifurcation where people are either really happy with them or really ticked with them. That's who you hear from. The majority you don't really hear from, even if they're pretty satisfied with it, because consumer data is self-reported and they have to want to tell the company something. Um, so that is very important for stock analysts to get their hands on, to figure out different ways to forecast future revenue. And that future revenue then gets discounted back to a present value, which then gives us what we consider our stock value should be. Now, then we compare that to what the stock price is. And if there's a difference, then there's an opportunity to make money or just to not lose money. And so the one thing also I just want to be, for someone who's watching this and they're like, oh, this is a new idea, be very careful about using that to make trading decisions. And the reason why is because companies can lose clients for a long time before it begins to impact their revenue. Like I said earlier, are they getting new clients? Yeah, they're probably onboarding new clients that are excited about the product or service, but the clients that are leaving are unhappy, right? And generally, businesses want to adapt their services or their products so they can get the most amount of money out of these markets, these addressable markets as possible. But if for a client that, or for a company that just is kind of ignoring the client, it can take a long time for them to lose a lot of their business and have that show up in their earnings.
So one of the examples that you gave when we were talking about this was BlackBerry, which I think we can talk about because they don't exist as a company anymore, right? Iron Mountain uh, was the company, right?
Uh, Research in motion,
RAM, that's right. Research in
RIN.
motion.
That's right.
Iron Mountain is a security
They store,
company.
yeah, they store documents.
There we go. That's the difference. So RAM. So their experience, right? And we had I can when I think back to this, we actually had clients. So this was, oh gosh, 15 plus years ago. We had clients who held RAM for a long time and they did not want to let go of it. And they did not want to let go and did not want to let go because most corporate and government, especially government employees, used Blackberries because they were very highly secure, right? And so they're like, oh, it's going to turn around. This is the only option, right? Government employees have to use this. We're not getting rid of the stock. And they wrote it literally into the ground
Yeah.
until it was not worth anything anymore. Like, all right, well,
Yeah, and that happens. I mean, it's happened to and this is one of the things we talked about pre-recording was you got to be really careful about those type of statistics because back in the internet boom, it was eyeballs. You wanted to count the number of eyeballs on a website for you to determine whether they're going to be successful. Problem is not only do you have to translate those eyeballs from a website to cash coming in. And during the internet boom back in the late 90s, that was a stretch because some of these clients had lots of eyeballs, or these websites had lots of eyeballs, but not a lot of cash coming through the coffers. So you got to be real careful about translating that into cash flow, which is really critical for a business, obviously. Just to let you know, BlackBerry does still exist.
oh, do they?
Yes, it does. It's traded under the symbol BB at 282. We're not saying buy it or sell it. This was just a generalized comment of their history. Um, Another one I'm going to give you an example was Novell. Okay.
Mm.
Novell was one of the primary operating systems for almost all of Wintel, Windows Intel chipped Windows operated PCs. Excuse me. And um, Novell had 80 some odd percent installed base across America. I mean, it was amazing. But the problem is that's always what you heard when the corporate America when Novell's management talked to analysts. They never were talking about new products, new services, how they were trying to better themselves. And when it became too late, they tried to expand outside their sphere, and unfortunately didn't do that great. And then a Canadian company named Corel bought them up, and I'm sure they're using them far better than they were. But again, anytime a customer or anytime a company extols past data versus talking about future data, there's a problem there. And that's something where we try to differentiate because that's a business that's probably not going to do quite as well in the future.
Mm. Okay. So what I'm hearing, and just to like reiterate, um, recap, like we want to make sure that we are taking different things into account, customer surveys, data that we have about quality of the interactions that people have, all of that, like that's important. And then at the same time, a company that is fairly large can actually continue to grow for a while, even with customer problems showing through. It might take a bit of time for us to start actually seeing that reflected in the stock price of a company. So not something to ignore, but also not something to necessarily trade on um, right away or try to time from a market standpoint. Did I get that?
Right. Yep. I think that's perfect. It's be very careful because again, companies are adaptive organisms. And when something is going wrong, the company's going to try to adapt to make it better so that clients don't leave, so that clients are happy with the product or service. That's our whole that that's the company's job in effect. And so oftentimes they do pivot. There's a lot of companies that have pivoted and done quite well doing that. Um, so there's a number of companies today that have started as one thing and now are completely different. I'm gonna use IBM as another example. I'm not saying buy or sell IBM. I'm just purely using this as an example of transitioning businesses. IBM used to be solely a very large hardware provider, supercomputers, mainframes, and PCs. Well, IBM today is a very diversified provider, and most of it is actually software, or a lot of it is software, I should say. And so they've, again, companies transition over time to meet the demands of the market, and so we got to be real careful about using those type of indicators to time our trades, as opposed to just maybe they're a yellow flag. Let's watch this company, see if it starts to come through the revenue line.
And as a final thought there, we do actually like we hear about that when, for example, a CEO is outed for some reason, right? Someone who is resistant to change, and the company is big enough to replace senior leadership in that way. Like we do see that, and that can also leadership of a company can drive a company up or into the ground one way or the other, right? And so
Absolutely.
we do pay attention to that. We do see news headlines about those things when there are big shifts happening. We might not know ahead of time because that's usually insider information, right? Uh, if someone is being replaced, we'll find out when it's public, that kind of thing. But yes, we do follow and kind of look at those not statistics, but the leadership quality. And I know on some of our research reports that we actually run and for clients or for portfolio building, they actually, have scoring on leadership as well of a company. So that is an actual qualitative piece that is looked at by analysts as well.
Absolutely. Leadership can be critical. Um, I mean, who leads the company is a really important thing, can be a really important factor, because if they're good, they can really take the company to higher heights. If they're terrible, they can tank it pretty good. So um, you know, it's one of the things you got to be aware of.
And at Juncture, we're always paying attention, right? That's the
Yep, that's
I say.
that is true. We love what we do, so it's not a job, it's a avocation, not a vocation.
Love that. Well, that is a good place for us to wrap up for today, Brad. If anyone has any questions, as always, we love to receive your questions and comments. And if there's something that you want us to talk about on another episode, we would be happy to receive that. You can get a hold of me for the podcast specifically at Hannah, HANNAH, at expansiveceo.com. And Brad, how can people get a hold of you?
You can get a hold of me at B Haines, BHAINES at juncturewealth.com, or you can call our headquarters at 480-253-4100.
All right, you heard it here. So if you have anything that you want to hear from us about, let us know. We'd love to hear from you. And as always, I hope you have a wonderful week, and we will see you next time. That's it for this episode. Thanks for listening, and be sure to like and subscribe. And again, if anything resonated with you from this episode, I would love to hear from you. Email me at Hannah, HANNAH, at expansiveceo.com and tell me about it. And if you're ready for your greatest expansion, you can find ways to work with me at expansiveceo.com and at x2wealthplanning.com. That's X, the numeral 2, wealthplanning.com. So until next time, remember that there is enough, you are enough, and your birthright in this lifetime is to be expansive.